Good morning, everyone, and welcome to Embracer's Q3 2024-25 presentation. My name is Amar Galiasevic. I'm an equity analyst at Carnegie Investment Bank here in Stockholm, and I will be moderating the Q&A session after today's presentation. Embracer reported solid organic growth in the quarter, and after the quarter's end, also had a very successful release of Kingdom Come: Deliverance II, which I hope we'll hear more about in a couple of minutes. As always, we'll start off with a presentation by CEO Lars Wingefors and CFO Müge Bouillon, and potentially we'll also have a secret guest with us today. I'll come back for the Q&A session where you can ask questions in the room, on the teleconference, and also through the web. Without further ado, I'll hand the word over to you, Lars.
Thank you so much, and hello everyone, and welcome to this beautiful morning in Stockholm. Let's dive straight into the business highlights for the quarter. I'm trying to solve a technical problem here. Perhaps the technical team could change slide for me. Meanwhile, I could start telling you what happened in the quarter. The quarter exceeded our expectations. The organic growth amounted to 7%, with net sales of 7.4 billion. Adjusted EBIT came in at close to 1.2 billion, a more limited decline of 11% year over year compared to management expectations before the quarter, impacted by tough comparison figures in mobile games. Really pleased to announce that we had free cash flow of 900 million SEK in the quarter, with positive effects from PC console and previously executed CapEx savings. Müge will talk more about the financial performance later in the presentation. But first of all, we saw a healthy organic growth in Q3, as well as an improved margin in PC console. The organic growth was driven primarily by entertainment and services, and a much improved organic growth trend for mobile to 3% from minus 7% in the preceding quarter. The profitability was supported by a strong performance in PC console games, which had a 21% adjusted EBIT margin despite limited new releases in the quarter. And now, worth reminding, with limited new releases in the quarter, I'm really looking forward to the future. We have 7 billion in invested games pipeline by end of December. And we will talk very soon about Kingdom Come 2. That's part of that 7 billion. And talking about Kingdom Come: Deliverance II, it was successfully released after quarter end. The medieval role-playing game has been initially successful, not only in terms of player critics and reception, but also in terms of financial performance. This reflects the dedication and hard work of our development studio, Warhorse Studios, and our publisher, Deep Silver. The game sold over 1 million copies in the first 24 hours and is fast approaching 2 million, with an especially strong performance on Steam with over 250,000 peak concurrent players during last weekend. Our strong belief is that the game will continue to generate substantial revenues over the coming years, highlighting the exceptional quality, immersion, and appeal of Kingdom Come: Deliverance II. And looking back when Warhorse joined us 2019, I remember that day very much, and they already back then had been working on the game. And now, 6 years later, I'm glad that we have been allowing them to really create the game they wanted to create. I think we allowed them more than 2 years more than the original plan. And I've been asked many times about our interference in the game, and obviously we let the creative team make their game. And we have not been dictating that game from Sweden. I never try to dictate our products from Sweden, by the way. Martin is our secret guest, the CEO of Warhorse Studios, and he will join us in a minute. But before that, thirdly, I would like to say a highlight in the quarter is our strong financial position post the divestment of Easybrain. Over the past 18 months, we have created a stronger foundation for long-term value creation with lower capex and a significant net debt reduction. With a pro forma net cash position of around 5 billion SEK as of end of the quarter, we have a strong financial position, and we are also reassured by the performance and free cash flow generation in the quarter. With that said, we have a continued focus on operation efficiency and to unlock value. We remain dedicated to creating additional publicly listed companies with the separation of Coffee Stain and Friends from Middle-earth and Friends during the calendar year of 2025. We have a strong commitment from all our management teams to drive strategic execution and continuous operational improvements, continuing to address our fixed operating costs and improve our profitability. We expect those efforts to accelerate ahead of next spin-off. And finally, really pleased to see the successful spin-off and listing of Asmodee at Nasdaq Stockholm. Asmodee is now trading as a separately listed public company, and it's a testament to the dedication by our teams the past year from or within Asmodee, Embracer, and its advisors. I will remain a long-term and committed shareholder and look forward to contributing as a chairman of the board, working closely with the CEO Thomas and CFO Andrea. With that said, now let's hand over to my friend Martin at Warhorse for some further commentary on Kingdom Come 2. Martin?
Yes, hello. Thank you for the very warm introduction, Lars. Indeed, this is very personal to me, and you were right. I actually presented at an investor call back in 2019, the very next day after Embracer acquired Warhorse. And at that time, we were already working on KCD2, and I know you wanted us to create a great game. And I know you put a lot of trust in us, and as a result, we were able to create what is probably a gem or perhaps a piece of art. So truly, thank you very much. Thank you.
Thank you, Martin. It's a pleasure having you.
Thank you. So now let's talk about the Kingdom Come, about some hard facts. Kingdom Come Deliverance 2 release has been a great success for Warhorse Studios, Plaion Publishing, and Embracer. The title has achieved critical acclaim from press, influencers, and players with a Metacritic rating at 88% of all three formats, an 89% OpenCritic score, and a very positive review rating on Steam with 90% rating the game positively from our more than 20,000 players. At release, the game peaked with just under 160,000 concurrent players on Steam, and each day the peak player count has increased and peaked at over 250,000 this weekend, which is almost 3 times more than the original KCD1 and beyond other iconic games. And that is really a lot. Having nearly 260,000 concurrent players means that KCD2 is now 15th most played single-player game of all time, and made it into top 50 games ever being published on Steam. The release of KCD2 also set a new record for Twitch, with the largest peak viewership at nearly 470,000 viewers. This is notable since the last time a new game broke the usual top 5 titles on Twitch was Marvel Rivals in January with about 400,000 peak viewers, and before that it was Path of an Exile 2 in December 2024. By the way, neither title was a single-player RPG. With such viewership, we made it into top 60 of all ever streamed games on Twitch. As Lars said, Kingdom Come Deliverance sold over 1 million copies in under 24 hours, making it the fastest ever selling title for Plan Publishing, and is now approaching the 2 million mark quite quickly. We see strong player conversion from existing KCD1 owners with a large potential for ongoing retention. More than a third of KCD2 players are new to KCD universe and expanding the audience. We have a robust post-launch content pipeline and will deliver engagement and acquisition strategies for further drive in audience growth. Well, besides the hard facts and sales data, let me share also some soft data, or rather fun facts about how gamers actually play KCD2. Our telemetry has shown that gamers spend already 35 million hours in the game, which is about 20 hours for each player. That's also quite a lot already, or a bit more than 5 hours per day, in other words. And that is a lot. And indeed, we wish them to have great experience in another tens of hours that are still ahead of them, because KCD2 is indeed a very, very large game. Another landmark worth mentioning is 1.5 million drunken hours, which is 4% of the time played. Wow. I hope that they all are back sober again now. In respect of 600,000 sheep killed already, it's important to say indeed that no animal was hurt or killed, and they are all doing well indeed. But back to the facts, business facts. Our focus now is to maximize the full life cycle potential of this flagship IP to further capitalize on the market opportunities. There are 3 premium DLCs coming in the course of 2025. All of them are currently well in a very advanced production, and we believe that we will be adding strong new content that, besides other, will increase the replayability of the game and enhance an experience of the newcomers. So yeah, that's all from me. Thank you for your attention. Thank you very much.
Thank you so much. Thank you so much, Martin. Fantastic job you and the team have done. So thank you so much. We are looking all forward to this. Right. I wish all our releases were like Kingdom Come 2. That's our ambition. Now, back to business and looking at the PC console segment. Again, it was a low quarter, soft quarter on PC console. The organic growth amounted to -1%. However, adjusted EBIT increased 17% year over year, and the margin were 21%. The actual new releases in the quarter did not contribute a lot. We had much less new releases in revenues this quarter than the similar quarter last year. The releases in the quarter was Let's Sing, Metro on VR, the remastering of Legacy of Kain 1 and 2, and Goat Simulator Remastered. We did a number of subscription deals, primarily related to Goat Simulator franchise and Dead Island 2. And the actual amount of that was the exact same amount as last year. We do this kind of deals regularly in every quarter, basically. The catalog performed very well during holiday, and looking at the top 10 back catalog titles, again, Dead Island 2, but also very pleased to see Epic Mickey in the second quarter in the lifetime performed very well. Also, the full release of Satisfactory 1 contributed much in the quarter. And also glad to see that the MX versus ATV Legends franchise continues to go from strength to strength, and it had, I believe, its best month ever in December. The ROI chart still looks somewhat depressing, with 2.1 average, which is not good enough, and I'm not happy with that in average. But that's the reality based on everything we had over the past years. And I've been telling you many times that in the future we would improve this number, and I'm confident we will. Obviously, a title like Kingdom Come 2 would have a notable impact on the base of this ROI chart. But overall, the pipeline of our future games would improve this ROI. Looking in this specific quarter, we just had one title actually recouping full investment in the quarter. And I have to say that obviously we have a pipeline of many games that were initiated many years ago. And for example, the Metro VR game. It's a really good VR game, one of the best games actually released in that quarter. But the VR market is not what it used to be. And it did perform well compared to other VR games, but it would require many quarters or even years to recoup the full investment. But as long as you make really good games and high quality games, they would continue to perform quarter over quarter. So, as mentioned, we will continue our ongoing work to increase ROI and improve efficiency. Looking at the investments. Investments were around 40% higher than the book value of completed games, meaning our releases in the quarter. So we're still investing more than the value of the games releases in the quarter. But I'm happy that despite this, we deliver a solid margin and cash flow in the quarter, obviously driven by the catalog. The book value of completed games development now in Q4 is now expected to reach around 1.4 billion. Obviously improving this ratio. So Kingdom Come 2, Wreckfest, Killing Floor, and a number of other titles. And again, at the end of December, we had 7 billion of ongoing game development across 120 game development projects. Now looking forward, I believe we will have much more balance over the coming year and years between investments and completion of our game releases, and that would obviously also improve our cash flow generation. We have some imminent releases in this quarter, and actually tomorrow we are releasing the next remastering or remastered Tomb Raider 4-6. There is a lot of fans waiting for that to be released. The last one we did last year was exceeding our expectations, and I have no reasons to believe that this won't please fans either. A bit later in the quarter, in March, we are expecting to release Wreckfest 2 finally from our friends at Bugbear in Finland, to start on PC early access, and we will develop the game together with the community to be released as a full version next financial year, as it looks right now, on all formats. Breakfast has been one of our most successful franchises over the past years. And finally, Killing Floor 3 from Tripwire. Tripwire is an iconic developer that joined the group now 4 years ago, and they've been working on this game since then. It's a sizable team in North America, and I'm confident in their ability to ship high quality products. Pleased to see some early previews on the game from fans, and I know they next week have a beta running with the community, and we all look forward to the full release on March 25th on all formats. Looking on the mobile game segment, obviously the reported numbers including Easybrain, but post quarter end they have been divested, so next quarter we would only report Crazy Labs and Deca. But organic growth reported improved significantly to 3% year-over-year from -7% in preceding quarter. The adjusted EBIT margin amounted to 24%, which is lower year-over-year, driven by, as you see here, higher user acquisition costs, and with a tough comparison from last year's record high profitability. So last year we had 37% EBIT margin in the quarter, which was amazing. Now we have 24%, which I still think is okay. But when you're looking at mobile games, it's very difficult to look at the individual quarter. What's important is obviously the long-term trend, and the more you invest in user acquisitions, the more return you will have later. So if we invest a lot in user acquisitions, that's a good signal, because if you have good management teams, they know what they do. So that investments will pay off later. And very pleased to see, if you look at the net sales drivers, now including the Easybrain titles, really pleased to see a new title from our friends at Crazy Labs, Bus Frenzy, actually being number 2 already as a new hybrid casual game. And Bus Frenzy, alongside another successful game they had, Alien Invasion, that also continues to perform, which I know they're working on for the future, alongside 2 other hybrid casual titles that actually, in the end of third quarter, continue to perform, and they are now doing significant user acquisitions investments. So we're really looking forward to the Crazy Labs growth in the coming year. However, the profitability, reported profitability, will be impacted of high user acquisitions now also in the fourth quarter, and as we see now, first half of next financial year at least. Moving to entertainment and services, which had a really strong quarter, showed 19% organic growth, and it was primarily driven by Play-On partner publishing, which had several successful releases from partners in the quarter. Then the largest one being Undisputed, a new boxing game developed in the UK that we supported them with publishing. So this business segment also had a notable digital revenue, but it's accounted as entertainment and services revenue. The adjusted EBIT margin were 9% compared to 12% last year, and the lower margin is explained by the product mix effects. Last year we had notable royalty revenues within Middle-earth Enterprises, so that's the difference. we did have high expectations, or we did have expectations at least, on the Lord of the Rings cinematic movie, The War of Rohirrim. The performance so far has been financially soft. I personally enjoyed watching the movie, and hopefully there is more fans of Middle-earth and Lord of the Rings that will enjoy the movie on cinema and streaming services in the future, generating more revenues. So with that said, I would like to hand over to Müge.
Thank you, Lars. Good morning, everyone. It's a pleasure to be here. I'm very happy to report our financial performance. Well, before we plunge into the numbers, it's worth mentioning that all the numbers we'll be talking about today exclude Asmodee following the spin, as we said. And the numbers are in line with the preliminary numbers we had provided as part of the trading update in the end of January. You will see that the net sales of 7.4 billion in the quarter represent a 3% shortfall versus the same period last year. The main driver of that is the perimeter change as part of the divestments of Gearbox and Saber the same period last year. So once you exclude the effect of those perimeter changes, as Lars mentioned, we have an organic growth of 7%. And the main reason of the 7% organic growth comes from our entertainment and services activity, which actually grew by 19%. And in particular, the PLAION partner publishing, thanks to several successful releases, but also including the boxing game that Lars mentioned, Undisputed. Mobile also grew slightly, 2% year on year, but supported by the user acquisition cost that we just also mentioned. As far as the PC console element, it was only slightly down by -1% on a pro forma basis, impacted by few notable releases that amounted like 250 million for the quarter, compared to 50% higher the same quarter last year. If you were to look at the gross margin, you'll see a drop of 7 points compared to the same period last year. So I would say there are two main drivers to that. Half of that comes from the perimeter changes again, as part of the divestments of Saber and Gearbox, therefore lower PC console contribution in the margin. And the remaining part is really other mixed effects, particularly the net sales growth in lower margin partner publishing activities in our entertainment and services segment. Moving on to the right side, if we were to look at our marketing expenses, you will see that our marketing expenses as a percentage of net sales grew by 3 points to 14% compared to the same period last year. The primary driver is really the increase of user acquisition costs. As mentioned again, these are investments that we expect to benefit in the coming quarters, years. The user acquisition cost that you'll see increased by around 200 million, from 646 to 840 in the period, and we did enjoy, as Lars mentioned, some new releases coming from our Crazy Labs studio. I'm very happy to look at the evolution of our operating expenses. You will see that compared to the same period last year, we benefit an improvement of 7 points. We are all proud because almost entire improvement comes from the restructuring program and the benefits that we have put in place over the last quarters. The adjusted EBIT represents almost 140 million lower, with 1.2 billion for the quarter compared to the same quarter last year. It's worth mentioning that PC console contribution was more than 500 million, and it exceeded management's expectation for the quarter's performance. Our mobile segment, however, limited that impact with significant investments, as we mentioned, in the user acquisition costs, but again, that we hope to benefit in the coming quarters. Let's move on to the next slide. Well, I'm very happy to report this slide, our cash flow, where you will see a nice change of pattern, as we had previously communicated, where the free cash flow after net working capital amounted to 907 million SEK, which is considerably higher, more than 600 million higher than the same period last year. There are two main reasons explaining the improvement and the cash generation. One is the benefits, again, of the restructuring and perimeter change, leading to lower CapEx. And the second one is working capital improvements, primarily our PLAION studio, with proper steering in place. So very happy to see these numbers. Looking at the net cash flow from acquired divested companies, they primarily related to the earnouts. As a result, overall, you'll see that the cash flow for the period amounted 242 million SEK, which is 1.9 billion SEK higher than the same period last year. So a nice reason to be happy with what we see. Now let's maybe look at the right-hand side. You will see that the net debt at the end of December was 3.2 billion. It's worth mentioning that by February 7th, the total available liquidity of our group amounted to 12.7 billion, of which 7 billion cash. So another reason to be happy, but let me give you a bit more color. And let's take a look at the net cash earnout on a pro forma basis as well. You would recall, after the quarter on January 23rd, Embracer announced the closing of Easybrain divestment. Post the transaction, we have also announced a capital injection of 400 million into Asmodee. So on a pro forma basis, if you were to take into account the net proceeds from the divestment of Easybrain of 12.8 billion, and the equity investment in Asmodee for 4.6, we have a net cash position of 5 billion. Looking at the earnout obligations of 2.3 billion at the end of the period, it's worth mentioning that a very modest part is expected to be paid in the course of next year, only 0.5. Let's now move into the next slide. But before talking about Q4 24-25, I think it's worth that we take a look at the left side of the chart and talk about Q4 23-24. Due to all the perimeter changes we've been exposed and we enjoyed, you will see that the reported Q4 23-24 numbers amounted 1.4 billion of EBIT at group level. The divestment and spin-off, so the perimeter change effects, represent a total of over 700 million. So the comparable base going forward for the same quarter is 717 million SEK. So it's worth mentioning that the base itself is subject to an important change of perimeter. So on that perimeter change, when we were to look at Q4, on the PC console, we expect a higher adjusted EBIT year on year, primarily driven by the key releases, Kingdom Come Deliverance 2, as well as Killing Floor 3 that we expect to be released at the very late of the quarter. However, the quarter is expected to be negatively somehow impacted by Hyper Light Breaker, released in early access on PC in early Q4. Looking at mobile, we expect, as mentioned, limited EBIT contribution due to investment in user acquisition costs. For tabletop segment, the financials are no longer to be a part of the group, so nothing to say. As far as entertainment and services, we expect a limited EBIT contribution as well. simply just no notable product releases expected during the quarter and in a seasonally softer quarter. So with that said, I'd like to hand over back to you, Lars.
Thank you so much, Müge. I would like to provide some color on the years ahead, or we call it comments here. So looking ahead in the 3 coming financial years, we are currently scheduled to have 10, to our definition, more than 100 game developers at peak, at least. AAA games, and we already have all those 10 in active development, whereof 2 currently are scheduled to be released in the end of the upcoming financial year 25-26. I would like to re-emphasize that we don't dare to, if needed, put more time and resources into game releases in the end of the cycle to improve the quality and the performance ultimately. Obviously, we always plan to make fantastic games from the beginning, but plan changes sometimes. In addition, next year, we have a slate of, I would say, a very sizable slate of exciting, in terms of investment size, mid-size releases, including the Gothic 1 remake, Reanimal from our friends in Malmö. We have Fellowship developed here in Stockholm. We have Deep Rock Galactic Rogue Core in Denmark. We've got Titan Quest 2. Screamer made with our friends at Milestone in Italy. We got Satisfactory finally on console. And we are expecting to have the full release of Wreckfest 2 across all platforms. On top of this, we have a similar amount of unannounced titles scheduled to be released next financial year. Currently scheduled to be released. Worth highlighting, in the first quarter next financial year, we are not expecting to have any notable PC console game releases. And in the first half of next financial year, we expect the mobile game segment to be in growth mode, implying high user acquisition to sales. However, obviously, with a positive ROI post that period. We also expect continued the efforts addressing the operating cost and improved efficiency to have some impact in the next financial year. Yeah, so to give you some closing remarks before handing over to Amar and the Q&A. I would like to say that I'm very proud standing here today. Our people have made enormous achievements transforming the group since 2023. Embracer Group has never been in a better position. Through restructuring, divestments, and spin-offs, we have put ourselves in the driver's seat again. With a strong net cash position and a cash flow generating business, we are ready to continue our value creation journey one step at a time. Embracer Group consists of unique and irreplicable as a set of IPs, studios, talents, and companies with attractive path for future value creation. The Lord of the Rings and Tomb Raider are amongst the most well-known and iconic transmedia IPs, while our IP catalog consists of more than 300 game IPs. Our Scandinavian games, Coffee Stain, Ghost Ship, Experiment 101, Tarsier, Tuxedo Labs are amongst the global leaders in indie game development. 4A Games, Crystal Dynamics, Dambuster, Eidos Montreal, Gunfire Games, Tripwire, Warhorse Studios are recognized developers of high-quality AAA games. Bugbear and Milestone create racing games for dedicated audiences. Crazy Labs and Deca Games execute very successfully on their mobile games strategies. This is just to name a few fantastic companies within Embracer, supported by our talented individuals that I'm confident will deliver great value for many years to come. On the back of the successful listing of Asmodee, I'm more confident that spin-offs creates value. Regardless of precise future asset splits, I would like to emphasize what matters the most, to make sure our product stands out in terms of innovation and quality, driven by dedication and talent of our teams, just like Warhorse has proven with Kingdom Come: Deliverance 2. This delivers value to all our stakeholders, gamers, employees, and shareholders that would benefit from all this. Today's market is tough, and consumers rightfully have high demands to spend their hard-earned cash. Our industry continues to be under huge transition, driven by consumer demands, inflation, fatigue, lack of risk capital, new technology, AI, and different tools. As the rest of the industry, we will continue to adapt and optimize to remain an efficient and entrepreneurial force within gaming. Today, I'm getting approached for more consolidation opportunities around mergers, acquisitions, and divestitures than for many years. We will stay prudent and firmly committed to maximize shareholder value. So to conclude, I'm still standing here. I still believe in the vision we set out to provide a home and support for entrepreneurs and creators, and to have them strengthen each other. For me, it has been a long journey, over 32 years, since I first started my business within gaming. Today, I feel more energized and empowered than ever going into the future. We have many of the best gaming IPs, companies, and foremost people. I know they will deliver fantastic games and create value, and I can't wait to see what the future holds. So, thank you all. Aman?
So, welcome back to the Q&A session. And I would just like to remind you all that you're allowed to ask questions here in the room. And if you have any questions, just raise your hand and we will pass a mic along. Then we'll take the question from the teleconference, and also you can send in your questions through the web chat. But I think I'll warm up the stage a bit with a couple of questions from my side.
Looking forward.
Yeah, and I guess the big topic today and also over the past couple of weeks has been Kingdom Come: Deliverance 2. 1 million copies in less than 24 hours, approaching 2 million as we speak. How has this played out compared to your expectations? Are there any learnings you can take away from Warhorse and from this success to the rest of your studios?
Yeah, so I think I always said that I have high expectations on Warhorse and Kingdom Come. I know they were a fantastic team and they had some good on their hands. Comparing it to the actual budget and forecast we had within PlayOn and Warhorse, they are exceeding expectations. Are they exceeding perhaps my own little bit higher expectations? They are. I think the game is just outstanding. I'm really pleased to see that. And it seems to be performing a bit better than even my own high expectations. What gives me really confidence, it's a very high quality, unique, almost unique game that I'm confident will sell for many, many years to come. That's important. So.
And are there any kind of specific learnings you can do from Warhorse? What are they doing that's creating this success?
No, I think Warhorse is organically set up studio with some absolute amazingly creative people that knows how to make fantastic games. So if you allow them to take their time to make their vision and not interfering, out comes something fantastic. And I think that magic, obviously, we see across many other teams. And I'm confident that we have, many other teams and IPs that would also create some very high quality products over the coming years. So I think that's the learning. And another learning is obviously to allow them. From the beginning, I guess it was like 2 years more, but the game we were discussing, was it to be shipped prior to Christmas, in November, and then we decided, okay, let's put another 3 months of polishing, bug fixing, and everything. And I think it really played out very well. That it's a very good experience for the consumer buying the product. So I think we did a similar thing with Dead Island and also with the first Metro release. And I think putting that extra energy and resources in the last mile of development is worthwhile.
Good. And today we got some more color on the pipeline. You have 3 AAA projects for the coming 3 years, 2 scheduled for next year at least. Could you tell us anything more about the size of those games coming out next year, the AAA games, in relation to maybe Kingdom Come Deliverance or Dead Island or anything you've released in the past?
Well, they are. It's 2 very big titles. I think the base budget forecast is potentially at the same or a higher level than Kingdom Come. Now, let's see how much Kingdom Come do. It's overperforming, so in the end of the day, it's always hard. But it's 2, I think, already really good-looking games. In terms of invested amounts, it's one of them being a bit smaller and one of them being a bit bigger. So yeah.
Okay. Hope to get more information during the coming quarters. And how do you yourself think about the ROI for next year? I mean, you have these 2 potential then AAA games, a bunch of mid-sized games, but I guess most of these games have been in development for a couple of years. You've shut down game projects and studios over the past 18 months. These games have remained. Have the budget, is there a risk that the budgets have increased too much, that the ROI gets a hit? Or are you expecting an ROI improvement already next year?
Well, it's a bit mechanical, that ROI, because it's obviously based off, is it 25 billion or so? So it takes a while to, move the needle. I think we will move the needle, driven by Kingdom Come and those titles and other things, but it will take some time. I think looking at one of the titles, without disclosing too much, I need to be careful. I know for a fact that their previous game had a fantastic ROI. So I'm very confident that this one will do well as well.
Okay. And maybe a more broader question for the both of you. Are you now satisfied with how the group looks in terms of studios, cost structure, pipeline, or is there still work to do here to shape the group up in the coming years?
First of all, I don't like the word happy, As an entrepreneur, you're never happy as such, are you? No, but I obviously we have a lot of efficiency measures and consolidation that is ongoing. We have done a lot over the past years. Mygge has been part of the teams doing it, and they come a long way, but there is more to be done. As I said just before, the industry is in a change, and it's a brutal market. And you just need to have the right IPs size. You need to be efficient, but if you do, you make a lot of money. So stay focused, do the right things, and then you make a lot of money. And we have a plan doing it, so I'm confident.
Okay. Maybe a similar follow-up question. You've divested Easybrain now. How do you kind of reason about the rest of the mobile business remaining within Embracer, and what's the logic behind that?
No, they're great entrepreneurs. Sagi and the team is fantastic entrepreneurs that has been in mobile for, I imagine, almost 20 years, 15 years, and Kenneth Decca and his team is also really good. So it's a great platform for us to be mobile and to potentially, continue growing, deploy more capital in the future. If we are to start any sort of, new deployment of capital, I think it will be in mobile, where we see a lot of very creative opportunities. Smaller, acquiring certain IPs or smaller assets that we could integrate with strong synergies. So, no, it's two fantastic companies. Easybrain was, larger, also an amazing company, really good management team. I've been honored that they've been part of the group. Now they are with a good home, but I think I have a deep love for Crazy Labs and Decca. So,
Okay, time is flying, and before we let in the room and the teleconference, I just want to take one question, if I may, from the chat here, which struck me here. It's related to Asmodee, actually, and the spin-off. And the question is, Asmodee costs related to its listings were over 28 million euros, quite a lot of money. How is that possible?
No, to start, I think we need to look back a year where were we? We had a lot of debt. We had not executed the spin-off. We have not announced the plans. We have not done all the divestments. We were in a difficult position. I know, we had a plan, but we still haven't executed on that plan. Now, then the plan was obviously we need to refinance. We need to negotiate with, new banks, get new terms, loans. And, fantastic banks, they've been very supportive, but obviously banks are here to make money. So part of that deal is, you have some interest rates, but you also have some commitments to use them as advisors to do certain things, including the listing. So your power of negotiating are a bit more limited when you are in the, bit back leaning. If I would negotiate today, it would be cheaper.
I understand. Should we leave maybe for some questions from the room, if we have any? Just raise your hand. People are a bit shy today. Maybe we'll open up for the teleconference before we get back to the chat here.
Yes, we have a few from the telephone. The first one is from Martin Arnell from DNB. Please go ahead.
Hi guys, I hope you can hear me. Lars, can you share some light on Coffee Stain in the quarter and the key drivers, how you see the growth profile and margins in this business throughout the year and potentially also after the planned spin-off?
Are you talking about, hello Martin, Coffee Stain and Friends or Coffee Stain as a business?
Actually, Coffee Stain as a business, yes.
Yeah, so Coffee Stain had one of the strongest quarter ever in the third quarter with an amazing adjusted EBIT result driven by actually Goat Simulator franchise and a very strong performance on Satisfactory. So, you know, Coffee Stain always have solid quarters, but this quarter was really strong. It's not obviously every quarter they have deals with platforms, so depends on product releases and so on. On the long term, I'm confident in the team and their ability to create more content and great games that will drive growth. But I know they are very committed to bring high quality and to work with their community, so they will take their time to really do the right things, and that would ultimately create also financial success.
Do you feel positive on their growth outlook in the new fiscal year?
Yeah, well, I'm always on the long term. I'm positive. I think it's. I think we should always be cautious about growth outlooks in general. It's difficult to say. It obviously depends on, you know, when certain games are releasing and certain versions of game, for example, coming as a full game release, as Satisfactory did last year. It had a notable impact. So I don't know. I'm cautious to say that any strong words about their growth, but I'm just in general very positive. If everything hits next year, it will be a good year.
And on the other part of Coffee Stain and Friends, the mobile business, you had a lot of comments in the report about the outlook for mobile. Are you confident in the strategy here with the increase of UA investment and that's going to pay off? Can you share some more color on those comments?
Yeah, 100%. I talked to Sagi the other day, and I meet the team next week actually, and I've looked at the data. They have very solid teams working on monetization, and they know what they do. So if they invest a lot, that's a good thing for shareholders. So ultimately, that would bring a positive cash generation on the long term. But the profitability would be very muted in the fourth quarter, and as we see right now, in the first half of next year. Just because of reporting practice, you know, we can't capitalize investment into user acquisitions.
Got it. Okay, and my final question is on your discussions around asset allocation. Could this include alternatives to this planned next coming spin-off? You know, do you have any alternative tracks to the planned spin-off of Coffee Stain and Mobile?
You know, when you have a plan as a public listed company, you have that plan until you have a different plan. So now we have one plan, and that plan is the Coffee Stain and Friends in the end of this calendar year. So I don't want to create any headlines, Martin, so that's the plan.
Okay, thanks.
If you wish to ask a question, please press pound key 5 on your telephone keypad. The next question is from Simon Jönsson from ABG Sundal Collier. Please go ahead.
Good morning, and thank you for taking my question. So maybe you touched a bit on this already, but I'm interested in your view, Lars, on the size of both Coffee Stain and Friends and Middle-earth and Friends, you know, with the next spin-off here. And if you think that both will be, you know, of sufficient size as they are currently as publicly listed companies, or if you think one or both of them could be sort of better off doing some kind of M&A?
Now, again, we have a plan. Obviously, there is many alternative ideas and things, but I think both have the scale. It's obviously down to, what growth, cash flow generation would a business have to be, and what kind of asset would it be? I think there's many factors why it could be a good public company on its own. I think both of them has those parameters. So I'm not overly concerned about that. So, but back, we have one base plan, Simon, and it's hard really to give too much color whether we are thinking around any kind of further acquisitions or mergers or different parameters. We have a base plan.
Got it. Thank you. Also, just on Lord of the Rings IP, just wondering if you can share a bit what you think about the pipeline here for games and also other kind of potential royalties for Lord of the Rings the coming year here. I know we have the movies, but that's a bit further ahead.
Yeah, no, I think it would be not it would be not a growth year as such. There is not a lot of new products coming. Let's wait and see how the products are performing that are coming. There is a number of products, including games. But I think the long term, it's still way too early. Well, start talking about significant, royalties coming in or new games developed by, Embracer Studios. We are still years away from that, many years. So we are still, fairly early in those processes.
All right, thank you. That's all from me.
Thank you.
And the next question is from Aytaj Khalili from Barclays Bank. Please go ahead.
Hi. Hello. Thanks a lot for the presentation. I have 3 questions. So the first one, for the subscription development deals in third quarter, what are the cash dynamics? Will they be paid? Will you pay the cash over time, or will it all come during FY25? And the second one...
Sorry. Could we take one question at a time? I'm becoming
sure.
a bit old and my memory is a bit short.
It's okay.
So the first question on cash, did you hear that, Mygge?
Yes.
Okay, could you answer it?
It's about the subscription, whether the cash is going to come in immediately. And so while we do capture the cash in the course of the quarter, there is also a remaining bit which is supposed to continue in the coming quarter as well, but we do already translate in the course of the quarter.
Okay, that's great. And my second question is also related to this. So in terms of next year, do you expect any one-off subscription or development deals next year, or is the boost you saw in third quarter will leave a profit hole that needs to be filled in FY26?
No, well, perhaps I can give some color on that. I think there is less of those deals in the industry nowadays. There is services that we are providing content to if we think it's commercially right. The platforms are not paying, any crazy amounts anymore, but they haven't done for the past 12 months either. And when I look at the quarterly numbers of such deals the past 12 months, each quarter is fairly similar, actually. So the comparison numbers would be, those lower level numbers that we have seen the past year. I'm not expecting to have any crazy big deals on subscription programs coming through over the coming year. So there will be, I think, the continued business as usual that we had the past 12 months, basically.
Okay, that's great. And my final question, so given the track record of delays across the industry in the last few years, how are you thinking about the risk of the 2 AAA games in FY26 being delayed into FY27? What will you factor into guidance for FY26 when it comes to that? Or is it accounted in any way?
Well, we don't provide guidance to the market, so that's the first statement. No, but obviously the 2 big titles next financial year is coming in the end of the year, and I would say it's a risk. Could be even a high risk that at least one of them are slipping. Now we have a plan, and the plan is they are shipping. That's what everyone is working against, and I would like that to happen. But just learning from our, past years and the industry in general, the incremental return you are getting by putting the extra mile, as we did with Kingdom Come or Dead Island and other releases, is enormous. So I don't dare for a second to do it if we have to do it or should do it. But that is not the plan right now. But as a long-term shareholder, that's why I would like to give some color over the coming 3 years. If things are moving between quarters, between years, it doesn't matter so much. The cash flow is more or less the same on the long term. Hopefully improved if you delay it.
Thanks a lot.
Thank you.
And there are no more questions from the telco.
Okay. I think we can take a couple of questions here before we round up from the chat. A lot of questions on Wreckfest, actually.
Wow.
Yeah.
One of my favorites.
There's been a lot of emphasis on Wreckfest 2 in the presentation, some people think. And the questions are really, how important is the game for next year? Is it THQ's biggest title? And how is development doing next year or now?
I think looking at, to start, Wreckfest is a fantastic game by my fantastic team that joined very early in the Embracer journey. And I know they put all their energy to create something, really good. And they've done it for many years now, that Wreckfest 2 thing. And Wreckfest has been an absolute top, is a top 3 or top 2 franchise within THQ Nordic over the past years. So obviously there is a huge community. So if you do this right, they could have a success on their hand, I believe. But it's never easy to make games. So let's wait and see and to be humble. Looking at their forecast, bottom up, it's not their biggest titles as such financially next year. It's a big title. It's a sizable title for THQ Nordic. In the greater scheme of all our releases, it's important, but defined as mid-sized as in terms of revenue and investment.
Okay. And another question on PC console here. Following the success of Kingdom Come Deliverance, the question is basically, will there be a shift in focus from you as a company, putting more emphasis towards AAA and kind of big budget games? I know you announced a pipeline here with 10 AAA games. Or will you continue as usual?
No, there will be no shift. Our team do what they do best, and we will continue doing that. So there is no shift in strategy.
And finally, then, a question here in regards to the organizational changes you've done. You have a slimmer organization in place. Would you say you have more resources now to allocate and spend towards the back catalog?
Interesting question. I think there is plenty of opportunities on our catalog. but also porting, older products and IPs back to modern formats again. So we have a gold mine of IPs we are working through. We could improve those efforts. I was really pleased to see the work Aspire have done with Legacy of Kain. Happy to see Tomb Raider tomorrow. There's many other things coming over the coming year, but we can do even more. So, and financially, it's also obviously something you already own and have invested into. So I think with modern technology and experienced teams, we can do even more.
Okay, good answer. Time flies. I think we'll wrap it up here. Do you have any final words, Lars, to round this presentation up?
No, well, I'm energized for the future, so I can't wait until reporting in May.
Good. Thank you all for coming and listening in to the presentation.
Thank you.
Thank you.